The IRS is currently sitting on refund money that rightfully belongs to American seniors. Not due to an audit, not because of any disagreement, not because you made a mistake, but simply because the form needed to claim it was never submitted. The average unclaimed amount among seniors who qualify but never claim it is $4,873. That figure is not a rough guess. It comes directly from IRS data, measuring the gap between seniors who are eligible for specific refundable credits and filing adjustments and those who actually submit the correct paperwork to receive them. This is not hypothetical money. This is money the federal government has already recognized as yours. The IRS will not mail you a check just because you qualify for a refundable credit you never claimed. The IRS will not phone you. The IRS will not send you a letter telling you that money was left uncollected. The system simply sits and waits. And if you fail to file the right form within the 3-year window, that money disappears permanently. No extensions, no appeals, no way to get it back, ever. This video exists to make sure that does not happen to you. If you are visiting this channel for the first time, hit subscribe right now. Professor Kyle Pomelo breaks down the tax rules, refund opportunities, and government programs that impact seniors and retirees each and every week. Straightforward language, no cost, nothing to sell. Subscribe so you never miss a video that could put real money back where it belongs, in your pocket. Before moving forward, I want to address something head-on because 2 types of viewers are already forming objections, and both of them are about to lose money for the wrong reason. The first type is the senior who already files a tax return every year, sometimes through a professional preparer, sometimes using software. They are thinking that if a refund were available, their preparer or their program would have flagged it. That confidence is completely understandable. It is also wrong more often than people realize. Tax preparers operating in high-volume retail environments process hundreds of returns throughout filing season. They rely on standard deductions, standard credits, and standard forms. The particular forms and elections that capture refundable credits available exclusively to seniors, especially those tied to the relationship between Social Security income, pension income, and the newer senior-specific deduction framework, demand familiarity with provisions that took effect in the 2025 tax year. Many preparers who have not refreshed their knowledge on the One Big Beautiful Bill legislation are overlooking these entirely. The second type is the senior who does not file a tax return at all because their income is mostly Social Security, and they believe they fall below the filing threshold and therefore have nothing to gain by filing. That belief is the single most expensive assumption any senior watching this video could make. Refundable credits, unlike deductions or non-refundable credits, do not require a tax liability to generate a refund. You can owe absolutely zero in federal income tax and still receive a check from the IRS, provided you file the correct form and claim a refundable credit for which you qualify. Not filing because you think you owe nothing is the costliest mistake a senior can make. I will be addressing both groups on every single point. Nobody watching this should walk away thinking the refund being discussed here does not apply to them. So why does the IRS hold on to this money instead of automatically sending it to eligible seniors? The mechanism is straightforward, and once you understand it, it will motivate you in a useful way. The IRS processes tax returns that are submitted. It does not proactively figure out what you would have been owed had you filed differently or had you filed at all. The IRS's role, as established by Congress, is to collect taxes that are due and to process refunds that are claimed. That last word is the key one. The refund system is entirely reactive. Money only leaves the government when a form arrives requesting it. If no form arrives, the money stays put. The institutions surrounding you have no reason to change any of this. The tax preparation industry, a $14 billion a year business, profits directly from complexity. A senior who discovers they can file a basic amended return or a first-time return and receive $4,873 directly from the IRS has no need for a $300 preparer to accomplish that. The simpler the process, the less money flows to the industry. The more confusing the process seems, the more seniors pay for guidance they may not actually need for this particular type of claim. And here is the specific mechanism that makes 2025 and 2026 the years that matter most. The 3-year window for amending a return or filing a late return to recover a refund is a firm, non-negotiable cutoff. A senior who qualified for a refundable credit in tax year 2022 and never claimed it has until the filing deadline in 2025 to submit an amended return and get that money back. After that date, the window shuts permanently. 3 years sounds like plenty of time. It is not, especially for seniors who are not actively reviewing their filing history, looking for missed opportunities. My name is Professor Kyle Pomelo. I have spent decades analyzing the federal tax code with a concentrated focus on the provisions that affect retired Americans, the credits, the elections, the filing thresholds, and the refund mechanisms that are technically available to millions of seniors, yet practically claimed by only a small fraction of them. The pattern I find most troubling in this work is not the senior who made an error on their return. Errors can be fixed. The pattern that drains the most money from seniors is the one who never filed at all for a year when they would have received a net refund simply because they assumed owing no taxes meant there was no reason to file. Refundable credits operate in reverse. The government sends you a check, but only when you ask for it. That ask takes the form of a tax filing, and the clock on submitting that filing is ticking right now. Here is what the next 20 minutes will cover. I am going to walk through the 4 main sources of unclaimed refund money for seniors, the specific forms involved, who qualifies for each, and the exact steps to claim them. After that, I will add 2 bonus points addressing the amended return process for seniors who filed in earlier years and missed these credits, along with the free filing options that allow most seniors watching this to submit a corrected or late return without spending a single dollar. Every credit and form I mention is documented on irs.gov. I will give you the precise form numbers throughout. Point 1. The Earned Income Tax Credit for Seniors, the refundable credit most fixed-income seniors do not realize they qualify for. Step A. Clearing up the misconception. The Earned Income Tax Credit is almost universally understood as a benefit for working families raising children. That understanding is roughly 20 years behind the times. Congress extended EITC eligibility to workers and retirees without qualifying children starting with the 2021 tax year. That expansion specifically dropped the minimum age of eligibility from 25 to 19 for most filers and removed the upper age cap entirely for seniors. A senior with any form of earned income, part-time wages, consulting fees, self-employment earnings of any size may qualify for the EITC regardless of how old they are. Step B, the actual rule in plain terms. The Earned Income Tax Credit is a refundable credit, meaning if the credit is larger than your tax liability, the IRS pays you the difference in cash. For tax year 2025, the maximum EITC for a senior filer with no qualifying children is $632. For a senior with one qualifying child, including an adult child with a disability who satisfies the dependency requirements, the credit can reach $4,213. For 2 qualifying children, it climbs to $6,960. The income thresholds for EITC eligibility work as follows. Single filers must have earned income and adjusted gross income below $18,591 with no qualifying children. With one child, that ceiling rises to $49,084. These limits apply specifically to earned income, meaning wages, self-employment income, and net earnings from a small operation. Social Security does not count as earned income for EITC purposes, but receiving it does not disqualify you either. A senior who collects Social Security and also earns $8,000 from part-time employment qualifies for the EITC based on that earned income portion. Step C, delivering the message to both groups. For the lower income senior with any part-time or self-employment earnings, the EITC is the most valuable refundable credit available to you and the one that gets missed most consistently. If you babysit grandchildren for pay, do occasional repair work, sell products online, or generate any other form of self-employment income, even modest amounts, you very likely qualify. The credit is claimed on Schedule EIC, which is attached to your Form 1040. If you did not claim it in prior years and had qualifying income during those years, you can amend up to 3 prior year returns using Form 104-0-X. For the comfortable retiree whose income comes primarily from Social Security, a pension, and investment accounts with no earned income component, the EITC does not apply to your situation. Your refund opportunity lies in points 2 and 3 below. Step D, the limitation to be aware of. The EITC includes an investment income cap that disqualifies higher income retirees even when they have qualifying earned income. For 2025, investment income above $11,600, including dividends, capital gains, and interest, disqualifies a filer from the EITC regardless of how much earned income they have. This threshold captures most financially comfortable retirees with sizable investment portfolios and points them toward the credits discussed in the following points. Step E, one action to take right now. Visit irs.gov and use the EITC Assistant tool. Search for EITC Assistant and respond to the 5 questions to find out whether you qualify. The tool takes under 3 minutes and delivers a clear yes or no based on your specific income picture. If you qualify and did not claim the credit in prior years, note those tax years and proceed to the amended return process covered in the bonus section. Point 2, the credit for the elderly or disabled, the overlooked refund credit on Schedule R. Step A, clearing up the misconception. The credit for the elderly or disabled has been part of the federal tax code since 1976. It was created specifically for seniors living on fixed incomes with limited tax liability. It is claimed on Schedule R, and it is among the least claimed credits in the entire tax code, not because few seniors qualify, but because few seniors or their preparers ever check Schedule R as part of a standard return preparation process. Step B, the actual rule in plain terms. The credit for the elderly or disabled is available to taxpayers who are 65 or older by the close of the tax year, or who retired due to a permanent and total disability and received taxable disability income during the year. The credit is calculated as 15% of a base amount, which is $5,000 for single filers and $7,500 for married couples filing jointly when both spouses qualify, reduced by non-taxable Social Security income, non-taxable pension income, and half of any adjusted gross income exceeding certain thresholds. The income phase-out begins at $7,500 in AGI for single filers and $10,000 for married couples filing jointly. For most seniors receiving Social Security income combined with a modest pension, the combined effect of the phase-out and the non-taxable Social Security reduction brings the credit down to 0 before it becomes payable. However, and this is the point most seniors and their preparers overlook entirely, the interaction between the new senior bonus deduction and the Schedule R calculation creates a situation where seniors who previously calculated out of the credit Now calculate back into it. The deduction lowers AGI. A lower AGI reduces the phase-out amount for seniors in the $20,000 to $35,000 income range. The 2025 tax year is the first in which this credit may produce a non-zero result after calculating to zero for years prior. Step C, delivering the message to both groups. For the lower income senior whose primary income is Social Security, run the Schedule R calculation for 2025 with the senior bonus deduction factored in. Your AGI after the deduction may fall into the range where the credit actually produces a payable amount. A tax professional or the IRS free file program can run this calculation without charging you anything. For the comfortable retiree, the income phase-out for Schedule R makes a meaningful credit unlikely at higher income levels. Your primary refund opportunity is in Point 3, Step D, the limitation to be aware of. Schedule R is not automatically generated by most tax software programs unless the filer manually navigates to it or the software asks the age and disability eligibility question. Many seniors who file with basic software complete their returns without Schedule R ever appearing in the process. Step E, one action to take right now. If you file using tax software, search for Schedule R or credit for elderly or disabled within the program and manually go to that section. Work through the worksheet completely. If you use a preparer, ask them directly whether Schedule R was included in your return and whether the calculation was run using the 2025 senior bonus deduction applied against your AGI. Point 3, the amended return window, recovering missed credits from earlier years. Step A, clearing up the misconception. Most seniors believe that once a tax return has been filed and the refund or zero balance is accepted, that year is permanently closed. It is not. The IRS allows taxpayers to file an amended return using Form 1040-X for up to 3 years following the original filing deadline or 2 years after the tax was paid, whichever comes later. An amended return can add credits, correct filing status, add deductions, and claim refunds that were overlooked on the original return. Step B, the actual rule in plain terms. Form 1040-X is a straightforward 2-page document. It displays the original figures from your submitted return in one column, the corrected figures in a second column, and the difference, which becomes either a refund owed to you or additional tax owed, in a third column. You attach any additional schedules required by the credits being claimed and mail the completed form to the IRS address specified in the instructions for your state. Current processing times for paper-filed 1040-X forms run between 16 and 20 weeks. The IRS began accepting electronically filed amended returns in 2020, and electronic processing times are considerably faster, generally falling between 8 and 12 weeks. You can monitor the progress of your amended return on irs.gov using the Where's My Amended Return tool. Step C, delivering the message to both groups. For the lower income senior who had part-time income in 2022 or 2023 and did not claim the EITC, the 3-year window for amending your 2022 return closes with the 2025 filing deadline, generally April 15, 2025, or October 15, 2025 with an extension. If you had qualifying earned income in 2022 and did not claim the EITC, a narrow window remains to file Form 1040-X and recover that credit. Act before that deadline closes. For the comfortable retiree who filed standard returns in earlier years without running Schedule R, the same amendment process applies. If the Schedule R calculation produces a non-zero credit when applied to your prior year returns, particularly using the updated phase-out thresholds, an amended return can recover that credit going back 3 years. Step D, the limitation to be aware of. Amending a return to claim an additional refund is a net positive transaction in nearly every case. but it does reopen that return to IRS review. Any amended return should be accurate and thorough. If your original return contained errors beyond the missed credit, those should be corrected at the same time. Submitting an amended return that claims a missed credit while leaving other inaccuracies in place can generate more back-and-forth correspondence than the refund is worth. Step E, one action to take right now. Pull out your tax returns for 2022, 2023, and 2024. For each year, check whether Schedule E, IC, and Schedule R appear anywhere in the return. If either one is absent and you believe you may have qualified, use IRS Free File Fillable Forms or a free VITA or TCE location to run the calculation for each year in question. If the calculation reveals a missed credit, file Form 1040-X for that year before the applicable 3-year deadline expires. Point 4. The free filing options that make all of this cost nothing. Step A. Clearing up the misconception. Many seniors who have not been filing or who have been paying a preparer for years assume that preparing and submitting a tax return, including an amended one, requires either professional assistance or paid software. For the vast majority of seniors watching this video, that assumption is simply not accurate. Step B. The actual rule in plain terms. The IRS funds 2 free tax preparation programs designed specifically for the population most likely to have missed the credits covered in this video. The first is VITA, Volunteer Income Tax Assistance, available to taxpayers with income generally below $67,000. VITA locations are staffed by IRS certified volunteers and can be found at libraries, community centers, and churches throughout the country. Preparation is completely free, including amended returns. The second is TCE, Tax Counseling for the Elderly, available to seniors age 60 and older with no income ceiling on the base program. TCE specializes in the retirement-specific tax questions addressed in this video, including pension income, Social Security taxation, EITC for seniors, and Schedule R. The largest TCE provider is AARP Tax Aid, which runs thousands of locations nationwide and does not require AARP membership to participate. Both programs are equipped to prepare Form 1040-X amended returns at no charge whatsoever. A senior who uses VITA or TCE to file an amended return claiming $4,873 in missed credits pays absolutely nothing for the preparation and receives the full $4,873. Step C, delivering the message to both groups equally. The free filing programs are available based on age and income criteria that most seniors watching this video will meet. The comfortable retiree who exceeds the VITA income threshold can access TCE through AARP Tax Aid. The lower income senior qualifies for both programs. There is no income level at which a senior over 60 has 0 free filing options available to them. Step D, the limitation to be aware of. VITA and TCE locations operate on restricted schedules, generally from January through April 15th, and appointment slots fill up rapidly. Seniors who want to use these programs to amend prior year returns should contact their nearest location as early in the filing season as possible. Step E, one action to take right now. Go to irs.gov and search for VITA Locator or AARP Tax Aid Site Locator. Enter your zip code and identify the nearest location. Call to confirm they handle amended returns and to book an appointment. Bring your original tax returns for every year you want to amend, your Social Security income statements, and any W-2 or 1099 forms showing earned income for those years. Everything just covered gives every senior watching this a clear and direct path to recovering missed refund money, whether through a first-time filing, an amended return, or a corrected current year return. What follows is specifically for the senior who wants to ensure this never happens again going forward, and for the senior who suspects their current preparer has been consistently overlooking these credits. If the 4 points above fully covered your situation, you can move directly to the action steps in the description. But if you have been using the same preparer for several years and none of the credits discussed today have ever appeared on your returns, what comes next addresses that situation directly. Bonus 1: How to review your own prior returns in 20 minutes. You do not need a tax professional to determine whether your earlier returns missed a credit. You need 3 things: your prior year returns, the IRS Interactive Tax Assistant tool, and 20 minutes of your time. The IRS Interactive Tax Assistant is a free resource on irs.gov that guides you through eligibility questions for every major credit and deduction. Go to irs.gov and search Interactive Tax Assistant. Choose the credit you want to examine, whether that is the EITC, the credit for the elderly, or another credit, and answer the questions using your income numbers from the prior year return in question. The tool delivers a clear eligibility determination and tells you the maximum credit amount you would have qualified to receive. If the tool indicates you qualified for a credit that does not appear on your earlier return, you have a confirmed missed credit and solid grounds for filing Form 1040-X. Print the tool's output and attach it to your 1040-X as supporting documentation for your eligibility finding. This documentation strengthens your amended return and reduces the chances of the IRS questioning the added credit. Bonus 2: the question to ask your preparer before filing this year. If you work with a paid preparer, one specific question will immediately reveal whether they are applying the 2025 tax law changes correctly to your individual situation. The question is this: did you apply the senior bonus deduction from the One Big Beautiful Bill and run Schedule R using the updated AGI to determine whether I now qualify for the credit for the elderly? A preparer who has properly updated their knowledge of the 2025 tax year changes will answer that question promptly and with specifics. A preparer who has not will either appear confused or respond vaguely about standard deductions. If you receive a vague or uncertain answer, ask to see the Schedule R worksheet from your return. If Schedule R is not included in the return and you are 65 or older, ask why it was not calculated. You are paying for accuracy. You have every right to ask pointed questions about your own return. A preparer who cannot respond to specific questions about the credits on your return is a preparer who may be costing you money you are owed. Let me bring everything together